What's going on, guys? In this video, I want to talk to you guys about President Biden's $2 trillion infrastructure and climate plan and two stocks that I think would greatly benefit from this in the coming years. So stick around and let me tell you why. Hey guys, what's going on? I'm Grewal and thanks for tuning in. Today I want to talk to you guys about Biden's massive $2 trillion plan and how much money he's planning on allocating to some of the different sectors, as well as some of the stocks in one particular industry. But before we dive right in, I just want to say I'm not a financial advisor, so everything I say and do is for educational and entertainment purposes only and not to be taken as financial advice. And now, let me show you what the plan is. So here we have the breakdown of the $2 trillion. Roughly $650 billion will be spent on infrastructure at home. $621 billion will be spent on the transportation infrastructure, for example, like highways, public transit, airports, electric vehicles. And then $580 billion is going to be spent on research and development, workforce development, and manufacturing. And $400 billion is spent on the caretaking economy. So the area that I'm most interested in is the transportation infrastructure. And the biggest chunk of that $621 billion is going to electric vehicles because that is Biden's main priority. So in that $174 billion plan, they said that they would establish a national network of 500,000 charging stations by 2030 because they realized that people aren't going to buy electric vehicles until we have the charging infrastructure and electricity grid to support it. But looking even beyond this, guys, the potential for this is huge because close to 2 million electric vehicles were sold in 2020 and it's projected to get to 26 million in 2030. So in about less than 10 years, we'll have over 24 million electric vehicles sold. So that's not too far away. And of course, you need the electric vehicle chargers to help service all that. So I mean, these companies that we're going to be talking about aren't just good because of Biden's plan here. They're companies that I think will do really well if you guys are planning on holding it for the long run. So now that we know electric vehicle charging companies will benefit, let's take a look at the companies that we can actually invest in. So number one, we have Chargepoint. They are one of my favorites. They are the North American leader in level 2 charging networks with more than 70% of the market share. So they're well ahead of their competitors right now. And they've delivered about 88 million chargers to date. And an interesting fact is that every 2 seconds or less, someone actually plugs into the Chargepoint network. So that's pretty cool. But to give you guys a very quick rundown on this company, we're going to be taking a look at their investor presentation, which is just a few months old. So their vision is to move all people and goods on electric power. And this picture pretty much sums up their 3 lines of business. So they have commercial products and fleet products, such as supplying these chargers to car dealerships, but also having them like in retail locations like malls, and then also supplying these chargers to homes like us, like individuals. So from these 3 lines of business, they have annual subscription revenue coming in, as well as they sell their residential products with lifetime subscriptions, which are the home chargers. So it's pretty cool that they have consistent revenue coming in. And if we take a look at their projected revenues, by 2026 on this chart on the right, you can see that they'll have roughly $2 billion in revenue. So they're projecting very quick growth, which will be following the entire electric vehicle industry. However, if we took a look at their financial summary, just on page 31 here, they won't actually become cash flow positive until about 2025 and beyond. But the good thing is though, with this merger with Switchback Energy that brought them public, that cash that they're going to be receiving should be enough to fully fund them until they're able to become cash flow positive. So usually when a company has enough cash on hand to become cash flow positive, it's in an industry with very high growth. The companies are usually valued at pretty high multiples because that growth is taken into account. So you're kind of paying a premium for that future growth. So that's why I want to talk about Chargepoint, because it is valued pretty highly, but it has dropped quite a bit, which we'll be taking a look at a little bit later in the video. So now let's move on to the stock number 2. So the second company is EvBox, and this company is a SPAC as well, like Chargepoint. But Chargepoint already merged, so you can just search up Chargepoint stock and it'll show up. To look at the EvBox stock, you have to actually search TPGY stock. Right here, it's on the New York Stock Exchange, and when the merger does happen, the ticker symbol will change to EVB. So for now, it's TPGY. And this company is a 10-year-old company that owns Europe's largest electric vehicle charging station network with over 235 ChargePoint ports sold as of February 2021. And EvBox also has very similar product offerings compared to ChargePoint. They sell, right here on page 9, they sell hardware, software, and services to owners and drivers. So that's like supplying, again, car dealerships and putting these in retail locations like the malls, and also supplying the private homes. And another cool thing I wanted to show you guys was that they actually list who their comparables are in this business. And they've listed ChargePoint as one of them in the electric vehicle charging space because they have similar scale. They sell hardware and software, but the difference is that EvBox is primarily in Europe, ChargePoint is primarily in North America, and they're both expanding to each other's destinations because EvBox is going into North America and ChargePoint is expanding into Europe. So now the most important part, the valuation, because it doesn't matter if you're buying the best company in the world. If you overpay for that stock, well then you just made a risky investment. So EvBox right now, it's currently at around $18 and it's valued at around 2.3 billion. Whereas ChargePoint, this information is a little bit outdated. Currently the stock price is around $30, so the enterprise value is around 8 billion. So just by looking at the enterprise value, it seems like that ChargePoint is around 3 to 4 times the size of EvBox. But if we actually take a look at their revenues, it doesn't seem like that's the case. So ChargePoint's revenue, they've projected it up until 2026. Whereas EvBox is a little bit more conservative and they've only given us estimates up until 2023. So that's what we're going to compare it with. So ChargePoint's revenue from 2021 goes from 198 million to 346 million and then to 602 million by 2023. Whereas EvBox, if you look at the chart in the middle here, it goes from, these are euros. I've actually converted it. So from 2021, it goes from 144 million to about 266 million to about 440 million. So 440 million in revenue in 2023 compared to about 602 million in 2023 with ChargePoint. ChargePoint definitely does not have 3 to 4 times the size of EvBox's revenues. So there's definitely a big gap here that people are overpaying for ChargePoint, but that's also because it does project its growth up until 2026 and people are getting very excited that it could have revenues of $2 billion. So if you look at that bigger picture and say, okay, if I'm going to be holding this stock for 10 years, in 2026, this company should be worth, let's just say 20 billion. Well, then I should be doubling or tripling my investment. So yes, it is a good choice. But I personally think that based on these revenues, I feel EvBox would be a better buy as you're buying the company for cheaper, even though they're not far behind and they are expanding globally pretty quickly. And now that we've looked at the 2 best electric vehicle charging companies in my opinion, I also want to mention one other one just for comparison. It's called Blink Charging. So this company, they grew their revenues from 2 million to 6 million and they're valued at about 1.8 billion, which is just mind-boggling. That's crazy. They have 6 million in revenue and they're valued at 1.8 billion, whereas EvBox here, they have close to 150 million and they're valued at only like 2.5 billion. It really just doesn't make sense because so many of these companies have been bid up so high and people are paying so much for them and they just don't understand what they're really buying because they're falling into the hype of electric vehicle charging companies. Oh, they're going to do well, they're going to go up in the future. Well, I just want to make sure that you guys know what you guys are getting yourself into and you guys aren't overpaying for any company. And I want to show you guys one last thing here. It's what Jim Cramer has to say about some of these electric vehicle companies. And usually I don't like what Jim Cramer has to say because he says one thing and then 2 months later he says the exact opposite. But sometimes he actually does have some good things to say. So hear this out.
4.6 billion. Assuming they can hit their 2023 sales forecast, ChargePoint's trading at more than 18 times sales. EV goes at 28 times sales, both very expensive. Only EvBox sports a reasonable valuation, less than 7 times 2023 sales. Bottom line, if you want a charging station play, boom, EvBox seems like the best of the bunch. Very similar to ChargePoint, but with a faster growth and cheaper stock. Remember, you need to buy the SPAC TPG beneficial finance.
So there we have it, guys. If you guys want to benefit from this clean energy and Biden's plan, definitely take a look at TPGY because from its high, it's down about 40%, over 40%. and right now it's been stabilizing around this 18 level mark, and it's definitely cheaper than all the other companies around. So I hope you guys have a better understanding of the few stocks that I talked about today, and if you found any of this information helpful, then make sure you guys help me out as well by either subscribing or hitting the like button. And like always, I'll see you guys next time.